Good morning. This is Larry McMillan with a market update on Monday, August 10th, before the market opens. So last week, S&P gapped twice to the upside and continued higher throughout the week. Slowed down a little bit at the end of the week, but still is at new highs for this rally and certainly seems to be set on achieving a new all-time high at 33.95 or higher pretty soon. The breakout over the resistance at 32.80 leaves that as support. If it were to close back below 3200, though, I think that would be a failure of the breakout. That would be negative. But for right now, the chart remains positive. In addition, S&P is above its 4 standard deviation modified Bollinger Band, which means that that sell signal has been canceled out as well, and a new one is will be setting up, but not necessarily immediately. Market breadth has been much better. We've seen the oscillators now move to buy signals, and cumulative breadth has also expanded. So the cumulative advanced decline line in stocks only terms and in New York Stock Exchange terms has made new all-time highs, as has the cumulative volume, which is, I think, an even more important indicator. Meanwhile, put-call ratios remain at extremely low levels, which means they're very overbought, but they're still on buy signals. The weighted ratios continue to make new relative lows. The standard ratio has kind of just been moving sideways. Volatility has, of course, fallen in line as well. The VIX is below the 200-day moving average, as is the 20-day moving average of VIX, also below the 200-day. So that's a positive combination. And the VIX spike peak buy signal from July 14th is still in effect for another 4 trading days. The system that we built around that says that you're in those trades for 22 days if you're not stopped out, 22 trading days. Also, historic volatility, realized volatility, has gotten very low. It's down to 12% now. So there's a huge difference between VIX and the historic volatility, actual volatility, as well as the October VIX futures, which are sky high. Worried about the election, but perhaps there's just too much of a discrepancy there, and something's probably going to have to give. But the fact that realized volatility is down to 12% is nearing the overbought level, which would be at 10%. So right now, overall, we don't have any sell signals in place, so things look good for the stock market moving higher. I know I've seen some people that say, well, as soon as it makes the new all-time high and satisfies that target, then it'll turn lower. But it's not going to turn lower without actually confirmed sell signals, and we just don't have those right now. So we're remaining bullish as long as SPX remains above 3,200. Meanwhile, I encourage you to visit our website. We're having a Saturday seminar this week on the 15th, and we'll be discussing option modeling as well as the stock market and have an extensive question and answer session. In any case, visit the optionstrategist.com website and take a look at what we have going on there. I think you'll find some pretty interesting things, especially in terms of our newsletters.